this is Lauren with Verivest, and today we are meeting with Julie Lamb and Annie Dickerson from Goodegg Investments. Welcome, guys. We're really excited to speak with you today.
We're thrilled to be here.
Yes, absolutely. So I'd love to just hop right into the first question and hear a little bit of how you guys got started and how you ended up where you are today, and give us a little bit of your origin story.
Well, Lauren, both Julie and I are busy moms. Julie's got 3 kids. I've got 2 kids. And, when you're a mom, there's these conflicting sides of your life, right? On the one hand, you want to spend as much time as possible with your kids and your family. And on the other hand, you still want to build up your wealth for your family and build up your legacy and live the life that you want to live. And so I think both Julie and I, before we had met, sort of had these conflicts in our mind. And one thing that we turned to was real estate investing. And so independently, we both started investing in rental properties to start. And it was fantastic. Rental properties are great for passive income, but as you know, they can be sometimes a bit of a hassle, right? Even if you have a great property management team in place, you still have, you have to make the decisions of when to evict, whether to evict, or, you have maintenance issues and you have surprise things come up, right? And so, we were not alone in this. There are lots of busy parents out there, busy professionals who get fed up with rental property management. And they're like, okay, I just can't do it anymore. I must not be able to invest in real estate. And that's when Julie and I separately, again, this was all before we met, we found real estate syndications, and we discovered that there was actually a passive way to invest in real estate where we could just put our money in, invest with a group of people, and not have to deal with the hassles of being a landlord, but have the peace of mind in knowing that there was a team of professionals really taking care of that investment. So once we dipped our toes into that, we realized this is the key. This is what every busy parent needs. And so that's why we launched Goodegg Investments, because we really wanted to help other busy families out there and show them there is a way you can spend time with your family and also build your wealth at the same time.
That's great. Yeah, I love how family is really at the foundation of how you guys got started. It's great. Please tell me how you guys source deal flow and kind of what your acquisition strategy is.
Yeah, so we kind of have a multi-pronged approach when we're looking at sourcing our deal flow. So we have multiple avenues, as I'm sure most syndicators out there know. Anyone who's out there looking at multifamily apartments knows that your deal flow doesn't just come from one source. It has to come from many different sources, or else you're really sort of pigeonholing yourself into only one possible stream. And there's many different places. So we really look to our broker relationships that we have in the markets that we're in. We also do direct mailing campaigns, and we're very strategic with our direct mail campaign. When we're sending out our letters, we're really targeting the properties that are neighboring properties that are similar in like and kind to the other assets that we own in the area. And so we're really targeting, we're very specific with the direct mail campaign. I know a lot of others out there, kind of just direct mail campaign to as many different ones as they can in a particular area, but we're very targeted so that when we get a call back from our direct mail campaign, we know that it's exactly the type of like and kind of an asset that we're after that are very similar to the other ones that we already own in the markets that we're already in. Networking is another big one, right? Just letting other people know what types of assets we're going after, in what markets, what our strategy is, and really talking with anyone who has an opportunity to see deal flow. And that could be anyone from a property manager to insurance agents to tax consultants to lenders. So it really runs the gamut in terms of networking and who we may get deals from. But building up those lead sources is a key part of the way that we're able to find deals. And then lastly, partnerships. That's another way that we are able to, find opportunities where we're really leveraging the opportunities that other folks have and the relationships that they may have and the ability for them to get certain deals under contract based on their broker relationships in other markets. And so partnerships has been a big way that we've been able to find a lot of deals as well. And sort of our acquisition strategy, it really starts with us building the right relationships in the right markets that we're targeting. And really, we'll get into that later, but we'll talk about what the right markets mean to us. But it really starts with building those good relationships. And then it goes into doing our sort of what we call our phase one underwriting, where we're really looking at several different things. And I'll run through those pretty quickly. But we're looking at the vintage of the asset. We're looking at the crime stats in the area. We're looking at the average household income. We're looking at the schools, and we're looking at overall livable scores for the market, for the area. And if it sort of passes our initial phase one, then we move it to our sort of what we call phase two, where we do a deeper dive in our underwriting, and we really look to see if that investment is able to meet certain return metrics that we have, that our investors have, told us that they're looking for, and ones that kind of follow the returns that we've typically done, although that's changed over the last couple of years, as I'm sure most people are aware. But and then once we go through that process and we see that it passes the phase two, then we move through into potentially putting an LOI and then touring the properties and the comps and just making sure that we understand the area and what's happening there, talking with different city officials, whether it's police departments or fire departments, property management companies, so that we can kind of understand what's happening there. But that's kind of the overall strategy.
Yeah. Yeah, absolutely. And so you mentioned a little bit the importance of the market. So can you elaborate a little more on the key markets that you do operate in and why you select those markets?
Yeah, absolutely. So we really focus on 3 markets. So we've dabbled in a few others, but we've really found that the Texas market as well as the Carolinas are the markets that we want to really focus in on. And the reason that we focus there is really because when we look at all the markets across the U.S., we're really looking for markets that show a clear indication of growth. And that's 2 things. It's job growth and population growth. And Texas and the Carolinas, Texas probably a little bit more than the Carolinas, has shown a clear indication of that. So that's really the first thing that we look at. And then the second thing that we look at is we're looking at areas that have diverse employment industries, where not more than one industry really makes up more than 15% of the overall workforce. And that's really important to us, because what we don't want is for some kind of a downturn or something to come that hits one particular industry really hard and affects the overall, projected performance of the asset based on the fact that there was one industry that was really, dominating that market. Sort of like when you think of the Detroit market, where the automotive industry really was big there, or Houston, where the oil industry was pretty big there. It's changing now, but it was before. So that's one thing. And then the third thing we look at is looking for landlord-friendly states. So we want to make sure that if we're investing in these areas, that that we are able to have sort of a little greater control, I guess you could say, over when to evict, who to evict, and if we had to, if a tenant isn't paying, right? And so that's something that we look for as well. And then the last couple of things is really looking for an area that has is still affordable, and that's Texas and the Carolinas. In the big scheme of things, when you look nationally, affordability is still very clear there in the Carolinas and the Texas markets. And then lastly, it's just looking at do these areas present a strong demand for rentals moving forward, or is this an area where a lot of people are buying, maybe they're first-time home buyers, or just an area where people are buying homes as opposed to renting. And so those are kind of the top things that we look for.
Yeah. Yeah, I was very surprised to see the growth, specifically in North Carolina, and how so many companies are moving there and kind of opening offices there, and kind of like the boom in Charlotte or kind of the surrounding areas. So definitely I could see why that's a big market for you guys.
Yeah.
Yeah, absolutely. So what would you say is your investment philosophy? How do you determine whether a deal is worth doing or not?
So I mentioned earlier that, for our investors, right, they've got busy lives. They're parents, they're busy professionals. Some of them are doctors or attorneys or engineers, right? The last thing they want to do is have to worry about their investments. And so as far as our investment philosophy on the investor side, it's really three things. One is that peace of mind that I mentioned. So we invest first and foremost with capital preservation in mind. So what I mean by that is we want to make sure that we're not losing investor money. So all the deals that we're looking at, all the deals that pass that phase 1 and that phase 2 that Julie's talking about are ones that, they have a good, strong foundation. They've got minimal deferred maintenance. They're in really good, strong, growing markets. All of those criteria, right? So we're looking to make sure that first and foremost, it's a conservative deal, but the second prong, we don't want it to just be safe because that's a bank account, right? So we wanted to have some potential for growth. So that's the second piece, is we're looking for deals that have some opportunity, some upside in them. So we typically look for value add deals. And now this varies on a case-by-case basis where exactly the value comes from in a deal. Sometimes there's a ton of value to be added. Sometimes the strategy is a little bit different. But for example, we might go in and there might be, it's funny. My husband and I bought a rental property, I guess 10 years ago now. And we were just thinking the other day, like we redid the kitchens as soon as we moved in, or the kitchen as soon as we moved in. And now it's almost 10 years later and we're like, oh man, it's time to redo the kitchens again, right? And it's the same with apartments, right? And people think like, oh, it's built in the 70s. Oh, the kitchens are good. No, they're not, because every few years you need to update those because people have new expectations and the market's changing, new people are moving in. And so that's what we look for is those properties that are in really good shape. They just need a little bit of love. Right, so we go in and often we'll update the kitchens, the flooring, we'll do the landscaping, we'll update the pool area, the lighting, the paint, all of that stuff, all the cosmetic fixes to really perk it up and make it look really nice. And so as we're doing that, of course, we're adding the value both in terms of the community as well as adding the value for the investors. Because as you can imagine, every time we improve a unit, we can charge a little bit more for those rents. And then across, 1, 2, 300 units, that turns out to greatly boost the NOI or the net operating income. And so that's the second prong, is that growth. And that third prong, I would say, is impact. It's a big piece of our investment philosophy from the very first day we launched Goodegg Investments, and it's still strong now, is our focus on making an impact. We want to leave the world a better place than we found it, and we're doing it through these apartment communities. And so we're finding places that need a little bit of love, and we're going in. We've got our teams, we've got our network, and we're going in, we're rolling up our sleeves, and we're doing the hard work and turning these communities around and really revitalizing them.
Yeah, that's great. And I'd love for you to touch a little bit more on how you generate value once you've made the investment and kind of share with us your risk mitigation strategy.
Yes. So first is on the risk mitigation strategy is first and foremost, we invest only in deals that cash flow as is. There are some teams out there who will invest on the promise of future returns, or if this happens, then we'll hit these returns. And we don't invest on hope. We invest on what's current today. And so that's why we invest in deals that cash flow as is. So if we buy them today and we put our investors' money in them today, if we do nothing except maintain the status quo, they would still be cash flowing. So that is a big piece of our risk mitigation strategy, is to make sure that you are buying something that can stay afloat almost with or without us. You know, if we come in and do something, great. If not, they're still staying afloat. They're already in really good shape. And so then everything that we add on top of that is gravy. All of that is the upside. And so that's why it's so important, because if something like, God forbid, a global pandemic happens, right? Then we can scale back because we know that it still cash flows as is. Then we can say, okay, let's take a pause on these renovations. Let's hold back for a moment. Let's assess what's going on. Let's address the need right now. And we're always doing that. We're constantly looking at our strategy, looking at what's going on in the community, what's going on in the greater community as well as the world, making sure that we have enough of a buffer in our reserves, and making sure that the strategy still makes sense. So we're constantly reassessing that. And so as we're going through, you know, if at some times we may get a little bit more aggressive and say, okay, things are going really well. The market's going even greater than we thought. Let's do, you know, let's turn it up on the renovations. Let's keep going. Other times we may slow it down. And so I would say that's a big part of risk mitigation too, is really just having that awareness and that insight on an ongoing basis, not just to blindly go after what you put on paper at the beginning, but to constantly tweak based on exactly what's going on.
Yeah, absolutely. And obviously you guys have a phenomenal partnership, but please let me know who your key players involved are that allow you to execute your acquisition and your asset management strategy.
Yeah, so there's a number of different people. Obviously, well, it's funny because when I first got into this business, I thought that I, Julie Lamb, all by myself was going to go out there and take down an apartment building. And I quickly realized, after getting into the business, that there are many people involved in the process to take a deal from, beginning to end and take it full cycle. But some of those players early on, as we're going through the acquisition process, are really the property managers and the brokers, and that we work closely with. And then also we're talking with tax consultants, insurance agents, and then we're working very closely with our underwriter as well. And so, a lot of that, that's pretty much our team initially when we're looking at taking down a deal. And then post closing, once we've already gotten a deal under contract and we've closed on the deal and we've raised all the money, asset management usually goes back to us as well as the property management team. So that's pretty much, when you look at building a team or putting a team together, that's pretty much who we have on our team.
Mm-hmm. Great. Perfect. Julie and Annie, thank you so much for meeting with us today and telling us more about Goodegg Investments. It was phenomenal to hear more about your company, and we really look forward to working together.
Thank you.